Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. Today I want to go over an article released by the Financial Post this week, which argued that we have an accident waiting to happen here in Canada, as we're allowing people to borrow nearly 100% of their home's value when they go to purchase their new house. This article has created quite the firestorm within the industry and is creating a lot of confusion amongst borrowers as well as to whether or not they actually can get a zero down payment mortgage. So today I just want to briefly go over what the article entails and what it means by 100% financing, what we do allow in Canada, why it doesn't work, and then go over some of the numbers quickly just to show why the borrowed down payments mostly do not work in Canada. So we'll just start off with the article and we'll go from there. So the article states that Canada is coming close to allowing 100% financing on its mortgages. If you'll remember, pre-2008, we did allow for zero down mortgages. And then we had the global financial crisis, caused in large part by the financial crisis in the United States due to zero down mortgages. Post-2008, zero down were banned in Canada, in that we now require at least 5% down payment. What the article states is that we allow borrowed down payments. So that's where you can borrow the money from a family member, you can get it from a credit card, an unsecured line of credit, etc., and the bank will let you use that 5% down payment. The article even states that one of the mortgage brokers in Ontario says that nearly half of her deals are either borrowed down payments or cashback mortgages, both of which would be almost 100% financing on your house. And yes, we do allow for borrowed down payments. The lenders call it flex down. And there's only a few lenders who do it. But in my experience, and in most mortgage brokers that I speak with experience, it hardly ever works. And I want to go over why it doesn't work, because there's more and more confusion out there, especially when articles like this come out. So, our maximum debt ratios in Canada are 39% gross debt to service ratio and 44% total debt to service ratio. So the maximum amount of your income you can spend on your principal, interest, taxes, and heat is 39%. Qualified based off you having an interest rate right now of 5.25%. That was the stress test. The maximum you can spend on your house and all your other debts is 44%. So your mortgage payment and everything you're spending on the house has to equal 39%, and then once you borrow that down payment, the cost of servicing that down payment can only be 5% of your overall expenditures, your overall debt ratios. If that sounds a little confusing, just bear with me. It'll get easier in a second. So, to see why this doesn't work, let's take the case of London, Ontario, where our average household income is $111,250. In London, that will buy you a house of $540,000. Depending on where you are in the country, that's either very high or very low. Now, let's look at it once we use a borrowed down payment. So when we use a borrowed down payment, we have to service that down payment based off the lender's guidelines, and which is usually around 20% if it's an unsecured payment, because that's roughly what you pay on your credit cards. So that's the way, even if you're paying less, the lenders are going to assume that's what you're paying. Once we incorporate the cost of servicing that down payment, we move down to the maximum purchase price of $450,000, assuming that your debt servicing $22,500 on your down payment. That will keep you within ratios. Now that's with zero other debt, and the lenders still want to see that you have an extra 1.5% of your purchase price available for closing costs. So if you have to borrow that, your purchase price is going to be even below $450,000. Also, if it's a condo, we then have to incorporate condo fees into the debt ratios, which is going to shrink down that maximum purchase price even more. So you've gone from $540,000 maximum purchase price on your income all the way down to $450,000. So that's a $90,000 drop. Now you might be thinking, well, that's not bad if I can get into the market with zero down. and it's 450. That's still a decent purchase price. Here's why it's really not all that widespread and why it doesn't work very often. If you're earning $111,250 per year and you don't have any debt to service, there's a very good chance you have a down payment. If you have $111,000, no debt, and you don't have a down payment, chances are money is going elsewhere. It's very rare that people that make $110,000 won't be able to have a down payment when they don't have any other debts. You can save for a down payment very quickly with that much money. Now, obviously, everybody's circumstances are different and emergencies come up, but that's the exception rather than the norm. So we just don't often see that type of situation where people don't have a down payment but make enough money to debt service. So this article seems to say that it's a widespread problem in Canada and that it's getting worse and it's really something we need to worry about. It's a very alarmist article. But when you get down to it, it hardly ever works, so it doesn't happen. So it's not the article seems to imply that we're looking at a 2008 crisis like the U.S. had, and it's just not the case in Canada. It also references this broker that has 50% of her loans are either borrowed down payment or cashback mortgages. I don't believe that for a second. I don't even think the broker said that. I think there was probably some miscommunication there. Cashback mortgages, yeah, I could see that happening. That's where you can get 1, 2, or 3% cash back after you purchase your house. That I could see. But over 50% of her loans being borrowed down payments, myself, I haven't done a borrowed down payment loan in years and years. And I don't know any other brokers that do them widespread either. It's just not something that's talked about very often in the industry because it doesn't happen, because it never works. And we saw why it doesn't work when we look just at the numbers here in London. I don't do a lot of mortgages in Toronto or Calgary, obviously, but I would assume that they don't work there either for much the same reason. Because the difference in servicing the house and servicing your overall debt is so small, being able to service that down payment usually makes the purchase price so low that it just doesn't work out. I think it's really important that we disprove and show the issues with these articles as soon as they come out, because they create a lot of false hope on the one hand and anxiety on the other hand. False hope for the thousands of people who are wanting to get into the market and are having down payment issues with rent going sky high. This creates false hope in their eyes that, well, maybe they can do a zero down payment, and it's just not the case. As we've gone through, it doesn't work. It's got to be a very, very unique, niche set of circumstances for the zero down payment mortgage to work. And you're just giving people false hope for nothing. I've already gotten calls on, well, can I do a zero down? Can I do a zero down payment? And we go through and do everything, and it doesn't work out. And I think for people who are already feeling the stress enough of not being able to get into the housing market, this only adds fuel to the fire, which, I mean, there's no reason for it. And on the other hand, I think it adds economic anxiety to existing homeowners and to a lot of people in general. A large portion of the population doesn't know the ins and outs of what happened in 2008. I think there's a large sentiment out there, or a widespread belief, that housing prices go up, there's an economic problem, equals global financial crisis, and that's kind of the relationship, and that's just not the case. So when you publish articles like this and make people think that we're going back to 2008 times, it creates a lot of unnecessary anxiety, especially when you use half facts and alarmist language. And it's not good for the country. It's not good for the economic mood at a time when we're supposed to be coming out of COVID and we're hoping that we can get back to some semblance of normality in our economic development. Articles like this, purposeful or not, tend to instill the idea, or do instill the idea, that we're heading for a big economic recession similar to 2008, when that's just not the case. They're basing those assumptions on non-facts and non-research, because like I said, I don't think that broker actually said that. I think that was a miscommunication, and that's how much borrowed down payments do not happen in Canada. So I don't think this article is very well researched, and I think it's important that we correct all of its misconceptions right away. What do you think? Do you know anybody that's done a zero down payment mortgage in the past 13 years? I'd be very impressed if anybody was able to do it. Gifted down payments, yes. The gift from immediate family member, mother, father, sister, brother. But that's not 100% financing. That's not money that has to be paid back. That's a gift. So, if you do have any experiences with someone who was able to get a borrowed down payment and made it work, I'd love to hear it in the comments. Or any questions or comments, please list them below. If you like this video, please do click like and subscribe, and we'll have more news as it comes out. And thanks for watching.